Welcome to Trillium Plain Talk. My name is Steve Laska. I'm the managing partner here at Trillium. And as usual, I'm here with my partner, Matt Gomoll, who serves as the chief investment officer at our firm. And Matt, I think today we're going to talk a little bit about the dollar. And it's interesting. I'm looking forward to you putting it in context a little bit. There's a lot of stuff I think we'll get to, and it's not about oil, it's about the dollar. But we do have things going on there like the UAE leaving OPEC. And folks, top economists even said that, oil prices would have to be $150 to $175 a barrel for 6 months until it had real recession issues. So let's save that for another day and talk about what are we doing, since forever in this business, my entire time, I've had everybody worried about China becoming the world's reserve currency, Bitcoin becoming the world's reserve currency. And in reality, this is truly the greatest power of the United States, is that we are the world's reserve currency. It's not close on other things either. I don't think people realize how important it is. So what's on your mind today with respect to the dollar?
Yeah, so I just got in last night from an investment conference I was out at. The topic was not the US dollar. The topic was not US as a reserve currency, but it kept coming up in different ways. And kind of what brought this to mind for me was piecing these things together. As I'm talking to bond managers, and they're seeing things one way. And then I talked to some other folks, equity managers, global managers, and I'm hearing different things. And then you have news out of the UAE with currency swaps, and kind of piecing it all together and saying, I'm way more optimistic than I was 6 weeks ago. For me, the US dollar as a reserve currency is a big deal. Yes, we have, with my military background, I'm very focused on what our military strength is, but our US dollar strength is so important with our positioning in the world. And it's kind of underappreciated by, I think, most people. So always on the lookout, is this at risk? You would see, you've kind of mentioned the rise of China, the rise of BRICS, other competing currencies, cryptocurrencies. The euro had a shot at it and kind of blew it. So there are challenges, and an example would be, oil being sold in yuan instead of the dollar. Those things are kind of eating away at the hold the US dollar has over the global economic system. And 6 weeks ago, I would say I was a little more worried. We were, the Straits of Hormuz were closed. European allies were not happy with us, which led me in a direction of, okay, what does that look like 2 years out? Other people are trying to settle and trade with Iran directly and bypass the US dollar. So there's a lot of stuff going on. And then you fast forward to today and you see, okay, the Treasury is going on offense. So they're not just sitting there taking it and letting things happen. And I do think the currency swap that they're doing with UAE, providing a facility to trade currency, has been an important step. And I think we might see some more of those. And so in this conversation, I'll kind of want to get into what are those risks to the dollar? What are the risks to the bond market? What are some of those pressures? But then also, what are some of those sources of demand where, maybe it's not the same buyers of US dollars as we had in the past, but there's new ones. There's new directions that we're going in.
So you said something. I want to take just a second to educate our clients on something, if they've heard me over the years on why it couldn't happen, like why China couldn't be the reserve currency. And then I'm going to tell you why it could, right? So one reason that people have to know on what it takes to be the world's reserve currency is, first of all, you have to be able to buy that debt. And you can't buy Chinese debt, right? Second of all, you have to be able to use that currency outside of that country. And you can't do that with China. They have the yuan and it has to be converted into the renminbi. And you can only take out the equivalent of 50,000 US dollars a year. So the way the system is right now, it couldn't be done. However, Xi has proven to be progressive on looking at the future, right? And it's not that the only reason why you couldn't do it is because they wouldn't allow you to do it. It doesn't mean that they functionally couldn't flip a switch tomorrow and go, why not buy Chinese debt? Why not be able to take this money out of here? And there's been some precursors to this that a lot of people don't realize as well. Futures traders for a couple of decades now have been doing what I call synthetic trades. And so they would actually say there's different values to oil, for example, in different times and different currencies. So they would create these synthetic trades that it was all kind of at some level alchemy behind the scenes, but where they'd buy oil in Canadian dollars, or they'd buy oil in euro dollars, or they'd buy oil in pounds. But in reality, there is such a thing as the petrodollar, and I think that's some of the things that you're going to talk about today, and some of the adjustments that Besant is even looking forward on, because I said just one thing a second ago, the ability to buy debt. And there does come a time when your debt gets so high that it's not just the ability, it's the functionality of how much dollars can you produce. Like much of the US debt today, it's at some levels, it's like a fake debt, right? I mean, the dollar is a promissory note that will pay it. And when we take on debt, what we're really doing is devaluing our currency. And to a point, it gets absolutely, it can get out of control based on what else is going on in the world, because everything's relative, right? If you have X amount of debt, but the GDP is a certain size and these different things. But you would talk to me earlier this week and coming out of that conference of some really interesting ideas that I have not heard Treasury secretaries talk about in the past, of being that kind of forward thinking. I think finally the people realizing what I just said. Today, China can't be the reserve currency because they've set rules that don't allow it. They can change those rules.
Mm-hmm. Yeah. So let's dive into the bond market and our debt, right? So like the U.S. Treasuries is just U.S. debt, right? It is issuing a bond and saying, please buy it. The Fed controls that overnight rate. Extreme short end of the curve. They set a rate by committee, and it is what it is. But when we think about if you're going out 5, 10, 20, 30 years, those are bonds issued by the U.S. government, U.S. Treasuries. And the government comes in and says, we're going to sell these, let's call it 10-year bonds at 4%. It's going to be a 4% interest rate, and the bond's worth $1,000. If the bond market doesn't like that, because it says, no, we deserve to be paid more yield for the risk we're taking on because you have a ton of debt. That's the concern, that the bond market can push back on the U.S. government and say, yeah, I know what you want to price your debt at, and what you want to set interest rates. You want to set it at 4. We're not giving you 4. We're going to pay you less money for that same bond so that our yield, our interest rate, becomes 4.5, as an example, right? So in that example, if the government was selling a 10-year bond and the bond trader wanted to get 4.5 yield, they would buy it for $960 instead of $1,000, right? Buy it for less money makes the ongoing coupon worth more as a yield. And so that's kind of called bond vigilantes, right? Where bond traders and market participants can move what either companies or governments issue their debt at and what our cost of interest is based on their actions, not agreeing to buy it at 4% and saying, no, we're only going to buy it if it's this rate. So that all is a constraint, right? That is putting pressure on the U.S. government to either decrease that deficit and the total debt to get in a comfortable level where bond buyers are good with, or you need some other mechanism. So part of that being a real constraint, we then see that there might be more buyers out there for U.S. debt. It might not look like the same long-term debt, 10, 20, 30-year debt, but there are more buyers coming on for short-term debt. And this is where we get into some other interesting topics on stablecoins and tokenization and the role U.S. equities even have in driving demand for U.S. dollars.
Interesting. So what's the consensus?
Yeah. So getting into like, I'll go down this rabbit hole of stablecoins. So people have heard of cryptocurrency, and when you hear that, you think Bitcoin and you think scams and you think, the stuff that makes the headlines. It's really just a technology. Blockchain technology is just a technology. It's a ledger. And so what companies have done and are adopting to is just having a $1 pegged. It's called a stablecoin. This thing is worth $1. And because it's worth $1, it goes and buys a ultra short treasury to be worth $1. So that's the stable aspect. It's always, that thing should not move the way Bitcoin moves. It shouldn't move at all. It should just do whatever the US dollar does. So this ties into the idea of more assets being transacted on blockchain and doing it with stablecoins. And so right now, traditional finance, the way you buy and sell stocks and bonds and real estate and all these things, and think about the way you might send money, even to yourself. You got a bank. I got a bank with Bank of America. I got a bank with USAA. And if I'm sending money from one to the other, even though it's me, it could take 1 to 3 days for that cash to settle. Well, with a blockchain, it settles instantly. And so companies are seeing the value, even, payment processors like Visa or MasterCard or Stripe or Square are seeing the value of these instant settlement that can be done with the blockchain and using stablecoin to make that transaction. Well, we're in a great position if stablecoins are backed by $1. Now somebody in Africa or the Middle East or South America can transact with stablecoins that somebody along the way had to buy a US dollar to then transact it as a stablecoin. So the market for dollars that can end up on these rails, these tokenized rails, becomes massive. And we just so happen to be at the right place to position ourselves, and seeing the Treasury lean into, we want to support that. We're not going to make necessarily a US digital dollar, but we want all these regulated stablecoins to be backed by US dollars, because that means every dollar created on there is one backed by a US dollar for real. So that's a very interesting place for a lot more demand for US dollars worldwide, coming from places that aren't just foreign central banks buying and holding US dollars.
So it's interesting. I think it goes back about 20 years. There were like cash vehicles out there, and there was a big fear of like money markets breaking the buck, so to speak, hitting 98 or 99, 98 cents. And it would have a dramatic effect, by the way. Like it was a pretty big deal. And I like the term stablecoin. And I think there's something interesting. And I think, it's good thoughts by Bess. And when you said, like, we don't want to control them, we want them backed by the dollar. Because while I think that maybe we give up a little bit our intrinsic power, we're probably democratizing things a little bit. Because right now, again, another reason why you wouldn't use China as a reserve currency is they do currency manipulation overtly, right? And when you said the euro had the chance, the problem was it was herding cats, right? The European Economic Union was on par with the United States economy. China's much smaller economy than the United States. People don't realize that. It's still massive, but it's not near what ours is. So did they talk at all about that? Like the old thought of break the buck, where we were sitting here in America going, boy, if those money markets go to 99 cents or 98 cents, it's a real problem. And they were literally, the government was at one point going, well, we'll just make it not happen. Do you see stablecoin as, even if it's backed by the dollar, it's a little bit more worldwide democratized, like everybody's kind of participating, maybe the trust levels go up?
Right. Yeah. And so I'll kind of lean into the control that you mentioned we have with US dollars. If you physically hold US dollar, physical loosely, but hold US dollars in a bank, you are part of the global banking system that transacts in US dollars. And what we saw is we can weaponize that. We can seize those. We can freeze those. That happened in 2022. Russia invaded Ukraine. We froze a bunch of US dollars owned by either the Russian government or oligarchs. Other governments saw that and started to say, wow, US dollars are risky. I don't want to hold US dollars. This partially pushed that move in gold, where central banks were like, I want to hold the thing they can't take. They can't take my physical gold that I bought and repatriated to China or the Middle East or wherever. And that's part of the run we've had on gold, is a stable asset that isn't a US dollar. Well, US government can't seize stablecoins, right? So it's outside of their control because it's not the US dollar banking system. So the Treasury can't go and like take your stablecoin. And again, it's not that I necessarily think these would be stockpiled in the way that US dollars or gold is by a central bank. It's just democratizing, to your point, the use of them. Just get these in the hands of, billions of people worldwide and allow transactions to take place is going to create demand for these more US dollars, as well as putting financial assets that are already in like the US financial system just through these rails is another way that they're going to expand the use of them.
It's interesting. I see a different future, right? Like we talk about different times to invest in different countries and things like that. Again, what many of our clients probably don't realize is the United States left the gold standard in the early 70s, right? Mm-hmm. And like theoretically, by very, very good economists and, social scientists will tell you, had we remained on the gold standard, whatever our lives were like in the mid 80s is probably what we'd look like today, because it stifled growth. It was a finite, thing. So no matter what happens with gold now going to $4,000, tying the dollar to the gold standard was a problem. I'd imagine that this is, if it's good for other countries, in a lot of ways, it's good for us.
Mm-hmm. Yeah. And, so the other area that I'll mention is a source of US dollar growth is just equities. We talk about the equity market as a place for participating in the growth of US companies. Great, absolutely is that. However, if you're a foreigner who wants to participate in the US stock market, you got to buy dollars to then buy US stocks. So it's there's flows of foreign dollars into or out of US stocks changes as investors, see opportunities abroad or here in the US. But that's another important reminder that we have a lot of leading edge technology companies that other countries, foreign investors want to participate in. And to that extent that they're putting money in our US stock market, that's another buyer of US dollars, is they got to buy a US dollar to then buy a US stock. So those, like a couple of those things, yes, we have constraints. There is competition from other countries trying to get around the US dollar system. There was, I would say, concern over the strength of it 6 weeks ago. But what I'm seeing is there's counteractions. There are headwinds from too much spending, too much debt. Bond market can push back on our debts. Absolutely true. But I'm seeing just creative things out there by companies and the Treasury to say, how do we get more dollars used around the world? And they're taking action.
So there's a confluence of issues going on right now. And I'd love you to take on this topic, dissect it a little bit. So on one hand, we have a new Fed chairman, right? Massively breaking protocol. The outgoing chairman's going to stay on as a governor. That doesn't usually happen. So people are wondering if there's going to be turmoil there. We have Bessent being the most forward-thinking Treasury Secretary that I can remember and thinking about these things. We had the UAE leave OPEC, so they're no longer constrained by production on that, and we think there's going to be effects on things like the petrodollar. But dissect that out for our clients on what all that means to them, because these are ironically happening around the same time. Like, I mean, this isn't what you're talking about in the conference you were just at. This is all pretty new stuff, right? This isn't like, oh, we've been doing this for 4 or 5 years and we're just talking about it now. So all of these things are happening at the same time. What does that mean to our folks?
Yeah, tackling the Fed side, the concern that you'll hear in the news is Fed independence. It is all about the Fed is not supposed to be a political entity or influenced by politics. It's supposed to have its, dual mandate of stable employment and stable inflation. And so the concern is the incoming chairman politicized? Is the outgoing chairman, Powell, by staying on the board, is he politicizing things by saying, I'm, here to be a bulwark against this administration? So it's a little messy. And where that can show up is the bond market to say, gosh, we thought you were independent and we thought we could trust the Fed's actions. Now we're worried and we're going to reprice U.S. bonds, right? It's like, oh, these are more risky than we thought, so we're going to reprice them. That's the kind of concern around this whole thing. I think, I definitely don't like the administration's actions of going after Powell. They could have just let him, he would have gone away. He would be gone by now, or in mid-May. If they just did nothing, they applied pressure that didn't work. And so now he's fighting back and saying, I'm going to stick around. It sounds like he's not sticking around indefinitely. It sounds like he's saying, I'm going to stay around until I'm cleared, right? So he's got these kind of charges over the cost overruns of the renovation of the Fed building.
Yeah.
So it's like,
sure, they have a lot of control over that.
Yeah. So he's reasonably saying, all right, well, I'm not going to leave my position while you're coming after me, because I want the kind of the protection of the office, the protection of, you're now attacking me as a Fed governor, because he's going to step down from chair to governor. And so it's a reasonable position for him to take. If and when that gets dropped, that's where I would be concerned if he's like, no, I'm staying around, even though you dropped the thing, because I want to have influence. His statement so far doesn't indicate he wants to do that. It's just, I want to stay here till you knock it off, and then I'll leave, like every other Fed chairman. So we'll see, because he could still stay around if they dropped the whole case. That would be a different conversation. Right now, I think it's knock it off, stop coming after me, and I'll be gone. But until then, I'm going to hang out here.
Which, interestingly, by the way, is, I'm not saying whether it is or isn't in the best interest of the country. It is in the best interest of the administration if they get to replace him with somebody who thinks more like they do. And before you move on to the next part, I know I've said it before. I unapologetically am of the view that the Fed can be independent, but still should be collaborative with any administration that's in there on monetary policy, on economic policy, on foreign policy, on all these things. So independent is one thing, but it is a U.S. institution. And the idea, I don't care who is in office, of the Fed not at least advising and consulting with the administration. And then, hey, I'm all for it if they, smart people disagree and they're like, our job is to protect. But I would like to see it. And again, I don't care who is in office, the people elect our officials, and it should be collaborative. So sorry I interrupted you there. What's next?
I think coordination and collaboration is good, right? We want multiple institutions all kind of rowing in the same direction. We don't want them at odds with each other. The Congress is trying to do something with their spending, and the Fed's trying to do something at odds with that. That's not productive, and you're going to stay in the same place, right? They should be rowing in the same direction and going, in the right direction together. On the UAE, man, that is super interesting. I gotta imagine all this stuff is connected with talks around the Iran war, how that's impacted UAE, the US dollar swap they made. It seems connected that all these things are and them leaving OPEC, right? So for those who aren't really following it, you've heard of OPEC. They're a cartel that controls the production and flow of oil because they want to keep certain price ranges, right? So rather than every oil producer just blasting out as much oil as they possibly can, lowering prices because you'd have way more supply than the market can handle, they try to regulate and keep everybody in line. So UAE breaking away from that, they're not the first, but it's interesting that they're moving in that direction. And frankly, it feels like there's more alignment with the U.S., right? The U.S. has become a major oil producer and now exporting a lot because there's less coming out of the Middle East right this second. It seems coordinated that between the dollar swap, which is giving them access to dollars which they need for their current spending because their liquidity is probably a little tight with not selling a lot of oil right now. It seems coordinated and a good thing. It feels like getting another player in our corner, which is not bad.
Oh, I'm a fan of it. And, the OPEC, again, as the resident old guy, they have, it's an accurate word. They're a cartel, and that, has become a pejorative over the years, partially because of people like OPEC, right? Where it was like cartel didn't necessarily mean a bad thing. It meant a coordinated effort on something, but they were mafioso at times in the 70s and 80s because we didn't know how much we had here, for one, right? So they were kind of controlling big things on the world stage. What else is on your mind today, Matt?
Yeah, it's, I would say we're surprisingly calm in both bond and stock markets we're 2 months into this war with Iran, and we've talked about it over and over again. It's just kind of simmering, I'd say, without any major, yes, oil going to 100 is a major change from where it was. But we haven't gone to 150. Right. So it's this weird place where things are calm because people think it should end. The resolution and how the character of that ending matters. But meanwhile, we're not staying still, right? Like we're applying pressure economically to Iran with the blockade. We're making inroads with UAE. So it's interesting that I don't want to go as far as saying the world will look dramatically different after this, but it's looking different.
So as a quick reminder to our clients, so I do try to stay away from the political networks, on different research I do, either reading or looking at the right things. And so, like I said, there's a few economists out there that have said, look, here's the real story. Oil would have to be, close to 175 for 6 months for it to have a real recessionary effect on us. And the truth is, and some of this is pure luck, to be honest. Anybody who says they planned it out is not accurate, but almost the sting of oil, but the increased tax returns are offsetting each other in 2026. And I think it's important for our clients to know before you panic, you're getting a lot of people getting more money back on taxes. And while it may not be the win they expected because it's going out the other side, they're getting it at a time when certain things are increased in cost. So again, there's a consensus of non-political economists of saying that's how high this would have to be for a 6-month period, not a 1 or 2 day period. And there's a lot of signs, by the way. I know we didn't want to get on oil, but I do want to let folks know too, they'll run out of space to store oil pretty soon. The estimates go from 20 days to 60 days, but they're not 3 years of we can just keep pumping on oil. And like I've told people before, it's not like a dial, right? Because we got plenty of it here, but we're just a dial. We would just increase the world supply tomorrow, right? We just go, okay, we can make it for the entire Middle East. It's not that easy. So when you shut down production, which is part of what they'll have to do, it has an adverse effect on them more than anybody else, because no matter what their oil produces, there's going to be a bunch stored up in these other countries as well. And so that's important. But we won't stay on that topic today. We did have a viewer, we're always asking for input on what they want to hear. And so I would like you and I to work over the next couple of weeks to try to get off kind of lately it's been a lot of stuff about this, the same thing is he asked us to talk a little bit about healthcare. And I think it would be a good topic for us to do. What I'm going to say to Ray is, I don't know if I want to attack it from the fraud side. My own opinion is, and I guess it just depends on how you categorize it. I don't think there's as much fraud, like using the word fraud in healthcare, as there are bad actors exploiting the rules is what it really is, right? It's not fraud. They're not going to go to jail for it. And then you go to jail for fraud. You get arrested for fraud. It is just, there's some intrinsic rules in healthcare today, and some of them are being addressed. We know with drug prices, that allow bad actors to take advantage and drive up our healthcare costs and put some people in just an awful bind. And it's not just poor people. I know the person who made the comment. He's a person who's worked hard and had a lot of success, and these are still the things that can affect, he and his family as you get older and have healthcare concerns. So I usually ask you what you want to talk about, but I think I want us to try to go down that healthcare road on our next one. It'd be a nice break from war and oil. What do you think?
Yeah, sounds good.
All right, man. So, hey, as usual, thanks for tuning in. We would love you to share this podcast with others. We are getting good feedback when people watch it, and there's more people watching it that are actually subscribed to it. So it's great if you subscribe to it. You get reminders that we're on. Always give us your feedback, because like I said, the next one we're going to do is one based on feedback we got from a viewer who said, I'd really like to hear about this. So until next time, thanks, Matt, and look forward to seeing you guys all in a couple of weeks.
All right. Thanks, Steve.